Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's skating on thin ice. We're talking about a company facing a possible delisting from the New York Stock Exchange. It's like getting a corporate report card with a big fat needs improvement stamp. Before we get started, if you like getting the real story behind corporate filings, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the conversation. Nine Energy Service Inc. filed this report, and it's basically a warning signal about their stock price. This Form 8K is like an urgent update that companies have to file with the Securities and Exchange Commission, or SEC, when big things happen. In this case, it's about getting a notice from the New York Stock Exchange, or NYSE, saying their stock is trading too low. The main point of this report is that Nine Energy Service got a letter from the NYSE saying they're not meeting the exchange's rules because their stock price is too low. Think of it as the NYSE telling them, your stock price needs to shape up or you're out. Specifically, the NYSE said that the average closing price of Nine Energy's stock was less than $1.00 AL over a 30-day period. That's a problem because the NYSE wants to make sure listed companies maintain a certain level of value. Nine Energy Service says they're planning to tell the NYSE that they're going to fix the problem and get back in good standing. The good news is that the NYSE gives them some time, about 6 months, to get their stock price back up. To get back in compliance, Nine Energy needs to get its stock price to close at $1.00 or higher and keep the average closing price above $1.00 for 30 trading days within the 6-month time frame. One option they're considering is a reverse stock split. This is like taking a bunch of smaller slices of pizza and making them into fewer, bigger slices. It doesn't change the overall value of the company, but it can boost the stock price. However, they'd need to get their stockholders' approval for this. It gets worse. This isn't the first warning they've received. Back in October of the previous year, they got another notice because their average global market value was too low, below $50 million, and their stockholders' equity was also below $50 million for 30 days. If they get kicked off the NYSE, it could hurt them. It could make their stock less attractive to investors, which would make it harder for them to raise money. It could also make it harder to give stock options to employees. Right now, their stock is still trading on the NYSE under the ticker symbol 9, but with a .UBC added to show they're not in compliance. If they can fix things, that .BC will go away. If not, they'll get delisted. The report also includes a section called Forward-Looking Statements. This is where the company talks about what could go wrong in the future. They mention things like the ups and downs of the oil and gas industry, economic problems, supply chain issues, and being able to hold on to their employees. These forward-looking statements act like a disclaimer saying, hey, things are uncertain, so don't take our word as gospel. The company issued a press release about receiving the notice, trying to control the narrative and reassure investors. But the underlying issue remains the company's stock price is struggling. The press release is attached to this report, and it's basically a more public-friendly version of what's in the official filing. It's all about putting a positive spin on a tough situation. Now, what's our take on Nine Energy Service? They're in a tough spot. Getting one warning from the NCS is bad enough, but getting two shows they're facing some serious challenges. The low stock price and market capitalization suggest investors aren't confident in their future. They need to turn things around quickly, or they could be looking at a future outside the NYSE. The energy sector is very cyclical. While they talk about many different factors influencing their business, it mostly boils down to the price of oil and gas. We will be seeing how that goes in the next year, but for the short term, the outlook is not optimistic. Alright, that's our breakdown of Nine Energy Service's latest filing. What's your take on these challenges and how the company will respond? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.